Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Step into the future at the World Economic Forum at Davos 2024. 5 days of continuous coverage with top Indian and global leaders. Join an exclusive lineup of visionaries, CEOs and policymakers. From dialogues on climate change to economy to artificial intelligence. Experience the transformative conversations at Davos. Business Today Davos, powered by Motwani Jadeja Foundation, conglomerate partner Darwin.
Good morning to you all. Welcome to Market Today on Business Today Television. I am Shail Bhatnagar joining you from our Mumbai studios today. The markets on the last trading day of the week are likely to be flat to sideways. Mostly cues from overseas are flat. But of course, the IT stocks are going to react to fairly strong earnings declared by Infosys post-market hours. But let's first focus on the headlines. The Nifty is likely to see range-bound trade on Friday as flat overseas cues and a corrective phase on Dalal Street prevent bulls from aggressively buying into blue chips. And software stocks are likely to be in focus as Infosys' third quarter earnings were a shade better than expectations after it followed larger peer TCS in showing strong traction in new order wins and controlling inflation. A very warm welcome to all who are watching us on this Friday morning. The markets look fairly in a sideways to a corrective form as far as the main indices are concerned. The Nifty's daily chart is right there in front of you, as you can make out that from December 28th onwards over the last 2 weeks, the Nifty has remained range bound in a gap of about 400 points. The days, the fortnight's high being 21,840 as well as the low being 21,440. So it's a 400 point trading range in which the Nifty is oscillating for the want of better cues to either move up or correct downwards. So bulls are not letting it go down and bears are not letting it go up. It's a sideways time correction that's going in the markets. Let's see how long it lasts. But there was hope that third quarter earnings, the season began yesterday with both tech giants, Tata Consultancy Services, as also Infosys reporting earnings. Infosys came up after markets close, TCS during markets close. The numbers are fairly good. You can see some kind of strong buying happening in IT over the last 4-5 trading sessions. Let's see what happens today. But for the moment, Nifty's trend is flat to sideways as overseas cues are flat. We have a fresh weekly expiry on the Nifty beginning today. And what is really good as far as the positives are concerned within the Nifty, that frontline stocks such as Reliance Industries in particular are at record highs. In fact, if you look at Reliance's data, it was the top traded counter on the on the National Stock Exchange yesterday, something like 3,197 crores worth of transactions done. And what is more interesting is that the daily volume yesterday was about 2.7 times more than the 5-day average. So it's a record high. It's come up on very heavy volumes. And a little bit of data on the side. Mr. Mukesh Ambani, who's the owner of Reliance Industries, is now Asia's richest person. He's entered the $100 billion club, which makes him a centi-billionaire. And what's other interesting part, that the first two richest people in Asia are both from India, Mr. Mukesh Ambani and Mr. Gautam Adani, and primarily because of how their stock prices have moved. But coming back to the Nifty, it's the autos and the energy stocks that are providing a very strong support to the Nifty. And if you see stocks such as Bajaj Auto, Tata Motors, Hero Motors are also near record highs or at record highs, they are adding to the momentum on the long side. What is weak? Banks, of course, and it's the options chain in the Nifty which shows a fairly decent support at 21,500 and 21,400. Remember, Nifty closed at 21,650 yesterday, flat, up 28 points because it was the weekly expiry. Mostly on weekly expiry days, indices such as the Nifty and the Bank Nifty trade flat. What can we look forward to? Again, autos and RIL, they're likely to remain the top draw for traders on the long side. I don't think so that buying the Nifty on the dip is making sense. There is a lot of action in cash counters across the board. So Nifty and Bank Nifty are seen correcting, but a lot of action in PSUs, lot of action in defense counters, high beta, low ticket items are doing fairly well. So that part of the market is in very good shape. Now let's look at the Bank Nifty. The Bank Nifty's chart is in front of you. Fairly strong correction happening there, banks not participating in the upward movement. If you see the record high on the Bank Nifty that was hit on December 28th, that was somewhere in the vicinity of 48,600. The index closed at 47,438, up 77 points, but the corrective phase has been to the extent of 1,600 points on the Bank Nifty. As far as the option chain is concerned, you see a fairly strong support at 47,000 points on the Bank Nifty. And at the moment, we are sitting on 12th of Jan. When you look at the FNO expiry for January, there are only two gainers in the banking FNO space, which is IndusInd Bank and Axis Bank. Sadly, both of them have little weight in the Bank Nifty, but stocks such as Kotak Bank and SBI are down 5% in January's FNO expiry. HDFC Bank is down 3.5%. HDFC Bank is of course the highest weighted counter. If that is down, you can well imagine how Nifty Bank is behaving, and ICICI Bank is down as well to the extent of 2%. So both Nifty and Bank Nifty flat to sideways trade. Try not to buy the dips because it is not making sense, but cash remains king, and a lot of interesting things are happening as far as things are on the cash market. We'll be shortly joined by Brijesh Ale, who will look at the technical part of the market. He's from IDBI Capital Markets, and on the fundamental side of analysis, we'll be having Mr. Mayuresh Joshi, Head of Research at Market Smith India, joining us in a while. So if you look at stocks such as Engineers India, Barmer Lorry, if you look at stocks from the PSU space, let me just show you how they moved when yesterday's gains were concerned. Chennai Petroleum was 16% higher at 858. A very strong gain coming in ITDC, 3.6% higher, 482.45. We'll be shortly joined by Brijesh Ale. Brijesh, if you can hear me, a very warm good morning to you, and a very warm welcome to markets today. What are your views on the Nifty, and any particular picks that you can share with us?
Yeah, very good morning, sir. So I think the view remains positive for the day, because the entire week we saw that, as you said in the morning, 21,500 has been holding. So I don't believe that level is going to be taken down very easily. The trigger is we will be looking for the Monday's high, which was somewhere close to 21,763. So I believe once once we start approaching those levels, there are fair chances that the shorts may get short covering may be seen in the market. So bias is positive. Today, even if during the day also, I think once we scale about 21,700 level in the cash, I think there can be a further upside bias. Weekly close are looking positive. It may be the bank nifty is one which is not supporting, but then in case of bank nifty also, the levels of 47,000 is been protected as of now. So I think at least for the day, from the intraday, or maybe from the day's perspective, I think it should be a positive day. And I believe Nifty might close somewhere close to 21,700, close to those levels. So bias is extremely positive for the day. And with the individual stock specific, we should be taking the call is what I believe. If we talk of any of these stocks, then I think yesterday we saw Syngene was one stock which has given a very good breakout, volume breakout, and there is technical reversal in the counter. I think this stock is due for a good bounce from the current level. We can talk about another 40-50 points from the current level. Syngene is one stock which is I am liking. Next one would be the IPCA Lab. So again, it's a breakout candidate. What we saw in yesterday, IPCA is both in cash as well as F, both can be played out. From the current level, I think IPCA can also see some good momentum. Any corrections if we see maybe during the intraday, I think that again should be viewed as a buying opportunity. 1210 would be the target for the IPCA. And lastly, we are tracking this stock, Narayana Hrudayalaya. We are tracking it for quite a long time. I think if somebody wants to keep a watch on, want to play a little bit bigger move, then I think towards 1375, 1400 can be the position and target for the Narayana Hrudayalaya.
Okay, so these are the three stocks that Brijesh has in mind, and all three of them are from the pharma space. We'll keep an eye out on Syngene, IPCA Labs, and Narayan Hrudayalaya. Joining us is Mayuresh Joshi. Good morning, Mayuresh. The Nifty and the Bank Nifty in a sideways band. The Nifty, of course, in a 400-point trading range. But cash stocks are back in action as far as momentum is concerned on the long side. How do you see market sentiment on Dalal Street? What attracts you to the long side, and what is a bit worrying?
Morning, Shail sir. Morning, Brijesh. Always a pleasure to be on your show. The market sentiment obviously is now going to get re-rated as earnings start flowing in. And you've obviously seen a hint of that through TCS and Infosys' numbers. The market was penciling in the worst, and both these companies have probably delivered a fair set of numbers. So if earnings remain on track for the market, and again, the entire macro story, which remains extremely strong and robust for India, along with expectations of what can come through in the budget as far as capital account spending is concerned.
Recording in progress.
Ports, etc. I think that will give a huge leeway for growth in the next few quarters. So to that extent, earnings are going to be a base case scenario on how markets react from the current levels. The risk factors, more or less, Shail sir, are global in nature. What happens geopolitically, what happens in terms of the crude oil movement, as an example, is something that will just dampen the sentiments of the market for some time. But flows, both global and local, have remained extremely strong, which provides a huge structural support for the markets as we see it. So no structural downside for the markets. Any probable dips that come through in good pockets where things might continue growing strongly should be viewed and taken as buying opportunities.
Okay, Mayuresh, we have the opening ticks, and it's a fabulous opening as far as the pre-open rates are concerned. 200 points higher on the Nifty, 21,846, ladies and gentlemen, and this is contributed very, very strongly by Infosys, now up 3.5%, 1551. A strong uptick coming on HDFC Bank, 3% higher, 1698. This one is going to correct. It's unlikely to see this number throughout the day. TCS roaring ahead, 3% higher, 3848. And let me just see what Reliance is doing. Remember, this had hit a record high yesterday on very, very strong volumes. Reliance at the moment 1.65% lower at 2675. Remember, the run up to the record high has been fairly, very sharp, and that's the reason why just might some small profit booking be taking place. There's no let up on Infosys. The numbers came post market hours. The counter is up 4% at 1559. Let's shift focus to F&O stocks. I'm seeing a 10% uptick on Polycab. Remember, the counter lost 21% yesterday because of its tryst with regulatory authorities on the income tax side, but an uptick today. Let's see how long it lasts. You have a very strong sprinkling of IT amongst the top gainers. Emphasis 1.8% higher, 26.25. You have a strong move coming in Syngene. Remember, this is something that Brijesh has just suggested, 1.2% higher, 752. We have a fairly decent uptick on Dr. Reddy's, 1.5% higher, 57.75. Let's look at NSE 500. There's no let up on the Nifty, a very strong pre-opening trade, 21,837, 189 points higher. Nifty 500. There's Lodha Developers, that's interesting. So real estate 4.2% higher, 1180. You have a move coming in Nazara Technologies, 920, 1.9% higher. Fairly commonsensical names that are ticking. Let's look at turnover in terms of top picks. Nothing much happening there. We'll wait for the market to settle. But coming to you, Mayuresh, first, a very strong positive reaction coming in on Infosys. Your views on how the earnings came up. Most of the parameters were above expectations. So that's a big win at a time when nothing much was expected from Infosys and TCS. Third quarter PAT was at 6,106 crores versus an estimate of 6,043 crores. Revenue at 38,821 crore is ahead from the poll of 38,555 crores. Mayuresh, your view on Infosys?
No, much better numbers, as you said, sir. So two things. One, in terms of expectations of the revenue guidance cut, that was largely getting penciled in by the markets with the assumptions of a multi-million-dollar deal that probably got cancelled. But the lower end of the base has now got expanded from 1 to 1.5%. So again, there is a huge consolidation that analysts are probably seeing in terms of Infosys numbers. And the general trend, at least for the first two numbers that have probably come through, is that a lot of these IT companies are remaining a little bit cautious in terms of not expanding their headcount at this juncture, assuming a recovery that plays out both in the North American and the European markets, specifically in the BFSI stroke manufacturing vertical in the next couple of quarters. I think the next couple of quarters where the client budgeting cycle probably takes shape might be a little bit subdued, but to that extent, I think largely penciled in. And therefore, the extent in terms of the dampness in terms of earnings that was probably expected had largely got penciled in, and a better number probably got delivered both by Infosys and TCS. Again, I think these stocks have hardly done anything from the large cap space compared to the mid cap. And therefore, I think valuations plus the pivot levels in favor of these stocks.
Okay, let's get Brijesh into this conversation. Infosys, of course, the top gaining counter as far as index heavyweights are concerned. Brijesh, your view, 1545, 3.5% higher. Infosys keeps up with the tradition of giving a very volatile opening both on the short or on the long side the next day to its earnings. How are you looking at the chart of Infosys at the moment?
So we are positive on the Infosys. 1730 is our fundamental target for the Infosys. So we are going to buy this. And even yesterday when the market was correcting, we had the positive bias. So the stop loss would be 1470. That's a technical stop loss, but then fundamentally we are positive. So somewhere 1730 is the fundamental view. And even from the technical perspective, I think Infosys can be back to 1600 levels. That can be a trading opportunity. So both with the techno funda approach, I think one should go long in Infosys.
Okay. In terms of a 3% uptick, it would again be trading at 2-3 week highs. Let's see what TCS is doing because the earnings and the commentary of TCS was also fairly strong. Again, a 3% uptick on TCS at 38.48. Let's see what 38.48 means. Brijesh, your view on TCS at this level, what would you suggest? The most recent high is 39.24, and what's the all-time high? The all-time high is again somewhere in the vicinity of 4,000 or so, but striking distance of all-time high as far as TCS is concerned. Your view there?
Sir, I think we should be taking a long bet. So maybe even if it opens with a 3% gap up, I think it looks quite promising. 3,900 plus can be on charts. That couldn't be the immediate trade setup. And fundamentally, again, we have the 4,000 being the target for the TCS at this point. So I think close to 3,900, 3,920, some profit booking. Maybe whatever the intraday corrections we see, we will view that as a buying opportunity for the target of 4,000 level. It's again a slight directional view, but I would like to take that call.
Okay. Remember, the management of TCS will be in conversation with the managing editor Siddharth Zorabi at 9:30 a.m. on Market today. So keep an eye out on that. But it's a fairly strong view coming in, and both TCS and Infosys are not only the top gainers as far as the Nifty and the Nifty 500 are concerned, they are also the most active counters when it comes to pre-open trades settling down. Mayuresh, now this is a very interesting time for the Nifty itself. Reliance at record highs, TCS definitely moving in that direction. A lot of auto counters like Tata Motors, Hero Motors, as also Bajaj Auto at record highs. It essentially means that Nifty is likely to break out of its range today.
It is, and I think all the elephants are dancing, Shail sir. So, Infosys, TCS, you're probably seeing Reliance do very well yesterday. Maruti has hardly done anything. HDFC Bank, ICICI Bank have not delivered anything in the past 1 year. So obviously, I think there is a huge element in terms of risk reward being in favor of large caps, and therefore Nifty earnings should grow reasonably well, providing ample support in terms of the valuations as
well. Okay, so that's a big plus that we are looking at. Now let's look at the broader markets apart from index heavyweights. Remember, Polycab, the stock that had opened initially 10% higher, is now flat, about a percent uptick at 39.10. So prices have settled down fairly decently. Let's again do a small roundabout trip on F&O. Let's ignore TCS and Infosys. Reliance has flattened out. Remember, it had opened 1.65% lower. So this is a big plus. And my estimate is, Brijesh, your view here, how do you see the Nifty from 21,770 onwards? We are just a shade below the all-time high of 21,840.
So, sir, today it will be a gap up trade, and as I said in the morning, anything about 21,700, we are going to see a short covering. So I think maybe initially after the 10-15 minutes of the market opening, I think there would be a short covering in the market, and this, or more than a short covering, we can see the range breakout, and this range was in the 21,500 to 21,800. This 300 points from 21,800. So 21,100 should be the target for the, 22,100 should be the target for the Nifty. So I would be taking the long positions during the day.
Okay, let's see what is the extent of gap up that the Nifty is most likely to show today. For the moment, it's settled about 120, 125 points higher in pre-open trade, 21,771. The all-time high is in striking distance. Sentiment on the Lal Street has improved dramatically post Infosys earnings after markets close yesterday. We'll take a very quick break, and on the other side of the break, we'll discuss stocks that are likely to zoom upwards on Friday. Stick around.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Step into the future at the World Economic Forum at Davos 2024. 5 days of continuous coverage with top Indian and global leaders. Join an exclusive lineup of visionaries, CEOs, and policymakers. From dialogues on climate change to economy to artificial intelligence. Experience the transformative conversations at Davos. Business Today Davos, powered by Motwani Jadeja Foundation, conglomerate partner Darwin.
We're just a minute away from pre-open trades morphing into the opening quote of the markets on Friday. The Nifty in very, very fine shape. It's it's settled 120 points higher in pre-open to 21,723. Let's just take a detour on other stock prices. The entire Adani group of 10 stocks are slated to open higher. Adani Power about 1% higher, 546. Adani Ports 1210, 0.6% higher. Let's get Brijesh into this conversation. Adani Ports in particular, Brijesh, the counter at an all-time high. What are the charts telling you?
Sir, it's in uptrend. So basically 1150 is a trigger. So as long that is the immediate level to watch for. So I think the momentum will be positive. Anybody who having a long positions should keep 1150 as the stop loss and should ride the momentum. I think 1300, 1330, that's a technical target which I think the extended move can be seen. So it's a positive bet. The stop loss, the safe bet would be 1150 would be stop. Whatever we take the long positions, we follow 1150 as a stop loss and would ride this momentum.
Okay, the prices will now soon start to tick. We are just 10 seconds away from what's likely to be a day of record highs as far as the Nifty is concerned, led primarily by the tech giants Infosys and TCS. Yes, in fact, we have a better uptick. The Nifty is opening 120 points higher, 21,761. Bank Nifty is doing nothing. Let's just show the IT index. It's a 4-digit gain. 1,000 points higher, 35,725, and it's led by Infosys, 4% higher, 1555. TCS 2.7% higher, 3840. This is on the main board as far as the Nifty is concerned. I'll take a very quick look at the Nifty IT index. Okay, we have a 1,000-point uptick, 35,750. Apart from Infosys and TCS, there's a very strong rally in Coforge, 2.4% higher, 6386. Tech Mahindra 2% higher, 1276. How about HCL Tech and Wipro, both up 2%. It's a sea of green as far as IT is concerned. A very, very quick view, Brijesh. Any other IT stock that catches your fancy apart from Infosys and TCS? Let's make this very quick.
Yes, I think we'll go with the Coforge because that's again given a very clear trade setup on the higher side. Coforge close to 6,500 can be the trading bet. I think that should be the one thing we need to keep a watch on. Coforge can be the one pick.
Okay. Let's just look at what HDFC Bank is doing, 1652. I need to keep an eye out on Reliance as well, a bit of profit booking, no issue at all. 0.5% lower, 2703. How about ICICI Bank and Axis Bank? Absolutely flat, no issues there at all. Let's look at the FNO space minus the index heavyweights. What else is moving? Polycab 3.5% higher, 4006. We have Birla Soft 2% higher, 763. Okay, Wipro Tech, Coforge, HCL Tech. It's an IT day. We'll just avoid them. Amongst the top 12 gainers on FNO, it's 8 of them are IT. Okay, what else is moving? India Cements 256, 258.60, 0.3% higher. Who are the stocks which are on the losing side? Bharat Forge profit booking, Motherson Sumi profit booking a percent lower on Motherson, 108.75. Nestle profit booking 25.36 after a 10 for 1 stock split. It's a weakness in FMCG. One very quick look when it comes to the broader markets. The Nifty is now 95 points higher, still able to retains a large percentage of its gains. Okay, we tracked 19 indices for you. 15 of them are in the green. The IT index and the realty index and the media index are the top 3 gainers. The advanced decline is very strongly in favor of the bulls. 1546 stocks in the green compared with 382 in the red, and a very strong move coming in the energy basket as well. You have a very strong move on JSW Energy, Tata Communications, and of course IRFC. Coming to you, Mayuresh, your first view on IT and what now?
Positive, and I think the base has now been set specifically from large cap IT companies. We've always seen in the past few quarters that mid cap IT companies have delivered very strongly on numbers. Looking at the trend on how large cap ITs have started delivering, mid cap IT companies should also continue their strong performance when it comes to numbers delivery. And therefore, this space, even though it's a little bit stretched, both in terms of late stage basis as we see at Market Analyst and valuations as well, might still continue doing well. For the space as a whole, I think positive news flowing in, but be a little bit more selective here. So I think we like Cyient, we like Perso Solutions within the mid cap space, and obviously watch out for HCL Tech up the large cap.
Yes, I think HCL Tech is a stock to look forward to. Remember, it was already at a record high before Infosys and TCS started moving, and it's up 2% in trade today. A quick view, 1506 in front of you, Brijesh, on HCL Tech, up 22 rupees, 1.5% higher so far in trade. Your view on HCL Tech?
So it's a gap up trade and slightly profit booking is been observed. Maybe directionally it may look positive, but then 1530, 1550 can be the resistance zone. So slightly cautious, may not take the fresh buying at this level. By any chance, if it goes back to 1530, I would book my trades from the trading point of view. Positional point of view, I think it looks positive on charts.
Okay. As far as HCL Tech is concerned, I wanted to see the yes. Okay, now this is an interesting insight. 2.8% improvement in open interest for HCL Tech as far as futures are concerned. I'll very quickly look at what the options picture is saying, and the PCR in the meantime will be firing. The 1500 call for HCL Tech expiring on 25th of Jan. It's at 39 rupees 10 paisa. Brijesh, I'd require your indulgence on this one. 38.10, fairly strong uptick coming in here. Let's look at the all-time high for this one. It's about 44.89. A quick view on HCL Tech 1500 call, Brijesh.
So right now there's a short covering basically in 1500 strike price, 39 price. So I think we'll wait for a little bit of time. If the short covering turns into a fresh long build-up, so I think then we can take that view. But maybe a slight confirmation is needed. It's too early to comment. But then right now, what I can see, it's a short covering is seen. We'll need some more confirmation. But then with the risky trade, I think we can take this bet.
Okay. The other point I wanted to make was that it's the entire railway pack that's doing very, very well as far as trade is concerned. There is a 4.5% uptick on IRFC, 112. IRCTC is 1.5% higher at 955. IRCON is 1.8% higher, 198. And there is a fairly decent move that you can see on RVNL, now 205.85, 3% higher. Mayuresh, railways back in action. What would be your top pick when you come to this sector?
I think the whole pack is moving. My sense is that
Yes.
ex-Macro Rail is something that you should probably look on declines. There has obviously been a huge amount of balance sheet resurrection, if I may call it that way, in this financial year. And the expectations of building up in terms of balance sheet gains with more orders coming in with better margins, good execution, will probably mean that the next couple of years, the balance sheet will strengthen even further. So any pullbacks on a stock like ex-Macro Rail can be viewed as buying a port.
So that is one counter. I think at 186, even Texmaco Rail would be at a record high. Just let me check that in a moment. Tex Rail, it's moved fairly strongly, 1.7% higher. Okay, the most recent high was 188.80 about a month ago. So we'll wait for that. And yes, this is at least from what I can make out. Yes, and it's almost near an all-time high. So Tex Rail is something you can look at. Brijesh, would you want to comment on Texmaco Rail moving on fairly strong volumes?
Yes, sir. I think it's giving a breakout of the recent distribution pattern. So there was the sell-off in the earlier at the levels of 185. So I think that level has been taken out. The immediate range we can talk of another 10 points. So we can bet for till 200 levels on the higher side. It's a momentum trade. I think one should go long at this price with today's low itself as a stop loss. So I think with that trade setup, I think we can take the long idea.
Okay, it's almost 924, 925. Mayuresh, we've hit upon many stocks in opening trades. Anything that I have missed out, but it's caught your fancy? Okay, Brijesh, we've hit upon a lot of stocks. Anything that you've caught which I have missed out?
Sir, I think Nazara is one. Nazara Technology is one thing which is coming in a watch list. So I think we'll keep a watch on it. It is giving a breakout. So I think that can be one which is coming in my radar.
Okay, Nazara Technology is now up at 933, about 30 points higher. We'll just pay a little attention to the cash market as of now. We've discussed the railway stocks. Let's look at what's moving in defense. Remember, there was a very, very sharp uptick on Cochin Shipyard. At the moment, you have a 1.2% dip on Cochin Shipyard. BEML in the green, 1% higher, 31.77. Midhani and MTAR Tech are also moving about 0.5% up. So nothing much happening in defense today. Let's look at very high beta and low ticket items. In this particular space, you have HFCL, 1.35% higher, 90.3. You have a move coming in R Systems, 1.2% higher, 534. Let's just try and mark prices which are moving a bit higher. Just a moment, please. Okay. Again, it's a cross section of railway stocks that are ticking. RVNL 1.6% higher, 205. Geofin surprisingly has moved 1% higher, 254.40. I want to, Brijesh, take your view on Geofin. I know that the technical data is not much, but given the fact that Reliance is moving smartly over the last 1 week or so, there's a fairly decent, if modest, move coming on Geofin, now highest since September of 2023.
So yeah, as you said, with a very limited data, so let me take it from a technical point of view. It's the level is exactly 250 levels. For example, if we see a close above 250 levels, there is a formation of a bullish cup and handle kind of a formation, and this talks of only 30 points on the higher side. So, but we need a confirmation by any chance if there is a very strong close above 250 levels. Right now it's 254. Too early to see the take this move. But then in a maybe in 1 or 2 days, we like the Geo the final the results is lined up. But technically, from the chart pattern, it can be another 30 points move. The confirmation is 250 close on a closing basis. So if that is come into picture, then I think we can talk about another 30 points rally in the Geo finance.
Okay, let's just do a little bit more of market spotting. As far as top gainers are concerned, I'll just request the PCI to show Mastech 2931 up about 6.5%. A very, very strong view coming in as far as prices are concerned. The top 4 gaining counters on NSE 500 are IT First Source Solutions 203.20, 6.8% higher. Infosys, of course, we've discussed, but the counter is now gaining more steam, 5.9% higher, 1581. Scient Technologies, 2255 for you, 4.8% higher, and then, of course, we have IRFC. That's how it is. Let's look at the all-time highs when it comes to the NSE 500. We have the ones that we've just discussed, Mastech and FSL. Minda Corp from the auto ancillary space at the moment about 3.6% higher, 404.20 for you. It's actually IT all the way. This is how the moment is at the moment. A very, very strong uptick on the IT index, now 1264 points higher, almost at 36,000. There it's in front of you. We'll be shortly joined by Siddharth Zarabi, managing editor at Market Today, and he will begin the conversation with the TCS management. The TCS, of course, up 3.5% in trade, doing fantastically well. Is Siddharth on the line?
Good morning, Shail. I can hear you.
Siddharth, a very warm welcome.
Thank you very much, and a very good morning to all our viewers on Market Today. Shail, I was listening to your commentary about the IT pack and especially TCS, and we are also joined by the Chief Operating Officer and ED of TCS, Mr. N. Ganapathy Subramaniam. Good morning to Mr. Subramaniam. If he's with us, and we can then go across to him for what are really results that show that both TCS and Infosys have logged muted sales growth, but very key point here is that TCS has edged past Infy in what was otherwise a slow December quarter. If we have Mr. Subramaniam, we can then. Good morning. A very warm
good morning, Siddharth. Good morning, Siddharth. Nice to be here. Happy New Year to you and your viewers.
Happy New Year to you as well from Delhi. It's a bit fogged out, but a crisp morning in January. And I want to begin, Mr. Subramaniam, by asking you about your sense of the results that you have just logged in. The headlines clearly suggesting that December has been a slow quarter, but you have kind of logged better growth than peers. Your key takeaways from the third quarter performance?
I think we are extremely satisfied with the way the December quarter panned out for TCS, with a good deal momentum of $8.1 billion for the quarter, coming on top of 3 successive quarters of 10 billion plus deal value. This particular $8.1 billion has also come broad-based without any mega deal support, which means that these deals are small to medium size, both in terms of value and tenure, so that these get executed well in the next 12 to 24 months, which augurs well for the FY25 growth for us. We are happy with the fact that, look, manufacturing, power utilities, and the energy and utilities sector doing well, and all the regional markets, including India, Middle East, and Asia Pacific, all of them registering a very good growth for us. Banking financial services is impacted by seasonal furloughs, and also in the last quarter we completed two large programs for two of our large clients. That has resulted in a degrowth in the banking financial services sector, which should actually pick up well in the coming quarter thanks to the deals that we have signed. Overall, it's a very, very satisfying quarter, and we've also tested and advancing our own offerings on the generative AI front and cloud transformation embedded with generative AI and architectures related to that. So overall, very satisfying quarter from both intellectual perspective as well as client satisfaction and revenue growth perspective.
On the basis of the third quarter performance and the trends that you see, can you offer an outlook for the fourth quarter? Are there signs of a recovery, and what does that mean for the entire fiscal year, Mr. Subramanian?
I think the quarter four will be better than quarter three is what my sense is. But then, this particular financial year, we have had a huge headwind in terms of macroeconomic and other factors over the last 3 quarters. So FY24 would be a very muted in terms of the overall growth compared to FY23. But I think, FY25 should be a better year than FY24.
And when you say FY25 will be a better year, this is on account of your sense about the domestic market or the global slowdown, perhaps, the impact lessening?
No, I think the way to put in is, there are uncertainties, no doubt about it, and we have learned to enjoy the uncertainties, number one. Number two is that the regional markets, the India market, specifically some of the large programs that we are executing should do well. The regional markets, we see a good demand. The pipeline that we have seen in the last 2-3 quarters plus now, the deals that we have converted from the pipeline should all be able to, we should be able to execute it and clock revenue. That's the first one. The qualified pipeline that I see is also looking good. So, from my perspective, the North American market is a bit weak at this point in time, and then they're looking for some positive signs. But UK and Europe is starting to grow, and then UK has actually done well for us for the last few quarters. Europe this quarter has, I think, is bottomed out, and we are seeing some green shoots, and that should do well for FY25.
One of the key features that is noticeable in the third quarter is on the margins front, the way it was managed, and that seems to be a key driver. Margins have beaten street estimates. Adjusted EBIT margin increased 70 basis points quarter on quarter, and on an annualized basis, 50 basis points to 25. What's the outlook on this front?
We continue to bring in efficiencies and operational resilience and operational excellence is something that TCS is known for, and we had kick-started that kind of a focus, given that we saw some tentativeness in the revenue pickup over the last 2 quarters. I think this initiative will continue, and we should see improvement further in our margins from where we are today to the next one, barring any unforeseen circumstances.
Mr. Subramanian, what is the deal pipeline outlook? Because it's clear that incremental revenue growth in the third quarter, almost a third of that came from the Bharat Sanchar deal, a big deal, and you have in the past said on this very show that it's going to be spread out. So some color on that, and whether there is any visibility that you can offer our viewers on future deal growth.
Overall, as I said, the qualified pipeline that we had at the end of Q3, when I compare it with the qualified pipeline that we have at the end of Q4, that value has actually increased. After securing this $8 billion of TCV for Q3, right? So, which essentially means that there is demand out there, and which we are participating in those demands, and we would like to convert each of the opportunities that are coming our way. Secondly, that BSNL is a very large program of national importance. We have stayed focused in executing it, and we're working very closely with the BSNL and our OEM partners. As you know, TCS is a system integrator in this whole opportunity. And with the OEMs and with BSNL, we have charted out a plan to roll out an indigenous 4G and 5G network. We have started to do it in zones and some circles. And predominantly this quarter, we are focusing on North Zone and Punjab and Haryana circles. And the other circles are all opening up. Should do well, in the coming quarters. And it'll like any other deal, it'll also follow a kind of a bell curve, and we have just started climbing up the bell curve. And over the next 4 to 6 quarters, it should get done. All the 100,000 sites that for which we have received the order from BSNL, we hope to roll it out over the next 4 to 6 quarters.
What really is the focus of large clients overseas, especially? Are they still in cost control mode? Because post-COVID, we saw a certain kind of behavior and a mindset, and then cost control, inflation pressures. Was this, since we are talking at the top of 2024, what's your sense about how they will continue to think, and is a pivot possible, broadly speaking, where major clients in the Western markets are likely to say, let's go for growth again?
I think, first is the resilience focus is very important for most of our clients, specifically, whether it is manufacturing or power utility sector, the supply chain transformation that they are all embarking on post-COVID. They are in advanced stages of completion. I think they are continuing to invest in supply chain transition. And then those projects are on the way, and there is no depth of budget cuts or anything that we are seeing on that front. Likewise, investments in electric vehicles, batteries, and putting together digital twins and adopting digital technologies in the manufacturing power sector. They are actually seeing a peak, and they are continuing to do well, in these two sectors for these areas. All the other sectors, including manufacturing and this, there is always a cost and optimization focus, wherein, all the maintenance and support kind of work that we are doing, people are saying that, look, why don't you optimize this by embracing automation, intelligence, as well as generative AI kind of technologies. So all around, there is a cost and optimization focus, no doubt about it. In those areas, what we have seen is that we are participating in vendor consolidation type of deals, and that gives us an opportunity to increase our market share in each one of these segments, which we have seen that our market share has gained in the Q3, and that trend will continue in Q4. On the growth and innovation deals, there's a lot more focus on innovation. They are testing out a lot of pilots and proof of concepts, embracing Gen AI type of technologies. The growth opportunities are limited currently to the deals that they have signed on cloud migration and cloud transformation. Real business transformation deals, I think there is a tentativeness around it, and I think in the next 2 quarters, I hope that will get eased up.
On a side note, I was reading somewhere that a lot of businesses seem to be asking questions at the beginning of 2024 regarding the immediate, cash impact, profit impact from AI. Is that a sense that you would share, or are companies prepared for the long haul for AI to deliver results?
I think, there will be a bottom line impact on the immediate basis, in the sense that the AI technologies are being employed to gain productivity as the main focus and main lever at this juncture. So that should lead to bottom line impact, and that's okay, right? But then how these technologies are going to pan out in, let's say, in the front office, customer experience, and integrating into ecosystems a lot more seamlessly. Those kind of efforts will take, I think, in a few quarters. So the way that we have conceptualized this whole particular technology is, there are three waves. First wave is assist. The second wave is augment. The third wave is transform. Currently, many of these work that we are doing is in the assist area, where the technology is being exploited to deliver efficiencies by whatever we are doing. Can we do it efficiently? Can we do it better? That's the kind of focus in the assist area. Then it will become augment, where technologies will benefit in generating or creating cobots, by which it will supplement the work that you are doing, and it will provide certain amount of advice and assistance, or enhancement in terms of the ability for you to make a decision making. The third one is really the transformation, where it could become, let's say, self-managing and self-governing, and really leapfrogging itself for delivering the business growth and business impact that they are seeing. The third wave, I think we are probably about 4 to 5 quarters away.
All right. Okay, that's a good outlook on that. As we wind down this conversation, one point about headcount, and there's been a continuing decline in headcount almost by 1.7%. Do you expect this reduction to continue in the fourth quarter, or at some point you will have reached optimal levels of staffing given the overall business volume?
We had actually, hired a lot more than what we needed in the last few quarters, and now our approach has been to see how that capacity can be effectively utilized. And in that context, that we have not hired many people, even though in this quarter as well, we continue to look for key talent, and such talents that we have a competency gap. Those talents are being hired. And our approach, Siddharth, has always been, organically grow our talent. So we have integrated the number of people from the universities who are supposed to join us in FY24. A majority of them have joined. That are going according to plan. We've also started the hiring process for the coming financial year. We have reached out to the campuses, and we are one of the top recruiters in the universities of fresh talent. So overall, I think, we are performing, I should say, a balancing act in on one hand, improving the efficiency that we have. Second is that, keep reducing the bench and put them into productive engagements. And the third is continue to look for key talent from the market as well as from the universities.
One very final point, and I don't know if you've been informed of this or if you've noticed it, but one of the most trending keywords after your results announcement has been the dividend announcement. A quick comment about that dividend, because clearly a lot of market participants have been searching for information related to that.
I think, we have a capital allocation policy by which, we have always said that, look, 100% of the free cash flow that we have is something that we would return to our shareholders. And it is in line with that. I think, we had done a buyback the last quarter. I think it has gone really well. And then we felt that, look, what the cash that's available, what the free cash flow that's available. And there are instruments like buyback. The other instrument that's available is dividends. And then, so one is the interim dividend. So we chose to give a special dividend, to be within the capital allocation policies that we have.
All right, Mr. Subramaniam, thank you very much for your time with us today, and all the very best. Shailendra Bhatnagar. That was Mr. Subramaniam of TCS talking about various elements related to the recent performance. And very clearly, Shail, as you were listening into the commentary, there is a sense of caution that perhaps things are not going to get any worse than they had on the global front from a deal and contract perspective. But there's a lot of caution because concerns around the global economy and not just in IT shell continue to persist.
Yes.
And the most recent numbers on inflation that we have seen from the US, again, a bit of a surprise shell.
Absolutely true, Siddharth. But look at it from the other point of view that the performance that was declared both by TCS and Infosys was a shade better than the very, very tepid expectations that the markets had. And that's the reason why you see a very strong uptick that's come on TCS, now very close to its all-time high. Infosys, of course, is the top gainer. Both these counters are showing very, very good strength, and on very, very strong volumes they've risen today. They add a lot of incentive to the Nifty on the long side because as you said, TCS, Infosys and the entire large cap IT pack wasn't much of a participant all through 2023 as far as the index is concerned, but a 1200 point, actually a 1500 point uptick on the Nifty IT index at about 36 300 actually points to a dramatic shift as far as sentiment is concerned. And if you look at the top 15 gainers on IT on the NSE 500, they're dominated by IT, Siddharth.
Absolutely, and that's just to add that point there, Shail, before I hand it back to you, that the sense that we have had in various conversations with IT, large cap IT companies specifically, and we do this every quarter and otherwise as well, is that the post-COVID boom era and the 4 or 5 quarters of a reversal in the trend, that seems to be at some point coming to an end. There is clarity. Some of the most exuberant projections on headcounts, for example, margin expectations, large deals. And for TCS, what has particularly worked in this quarter is that large Bharat Sanchar deal. And these are once in a lifetime, frankly, deals, 10, 15-year horizon. Large public sector companies don't do that. So very clearly going forward, the full year may end a bit muted, but like Mr. Subramaniam said, FY25 might just be better. And one last point, Shail, as I toss back to you, it just struck me that if you look at the overall Tata pack, and I don't know if investors see it from that point of view and whether you will share my view, but the Tata Group and its companies are known and keep continuing to contribute to large projects of national significance, whether it is taking on a big thing like Air India, or whether contributing to certain massive construction projects of national importance, and TCS, for example, with Bharat Sanchar share.
Absolutely, Siddharth. The Tata Group has been a nation builder before the nation came into existence 75 years ago. And just a small aside here, ever since the new gentleman took over at the helm of Tata Sons, you've seen a phenomenal amount of value being unlocked in Tata companies on the exchanges. Remember, there was a time when the group was supposed to be moribund. It was supposed to be a company where it was supposed to be a group where you sort of joined at 22 years of age and retired at 65, 75, and you made a whole career out of yourself as far as the Tata Group is concerned. I'm sure that exists even now, but the companies now are really very energetic, very alive on markets. I'll tell you the record highs that are there. We'll start with the Tata Motors. It's doing a fabulous job on markets. Then we have Trent on the retail space. You have Tata Power in terms of the energy and the electricity space. TCS is just very close to a record high. and a host of other Tata Group companies that have done fantastically well. So a new management, a new life, and I'm sure a very close record high on TCS in the next 1 week or so, Siddharth.
Absolutely, and perhaps on that note, Shell, we should consider doing a deep dive into the Tata pack for those viewers who are interested of Market Today. Thanks for having me on the show, Shell.
It was always a pleasure, Siddharth. I wish you would make more frequent appearances on Market Today in the morning. Ladies and gentlemen, we'll take a very quick view on how the markets are behaving as of now, and then we'll call it a day so far and then join back at 2:30. The Nifty has managed to retain a large part of its early morning gap up. At the moment, 21,745, 99 points higher. The star of the day is the Nifty IT index. It's gaining very, very rapidly, a 4.5% uptick, which is at 36,321, brings the Nifty IT index to a fresh 52-week high. I'll tell you the right value we have at the moment. This is the highest since March of 2022. So almost a 2-year high as far as the IT index is concerned, and a gap up, which essentially means that a fresh wave of IT stocks has now taken over the Lal Street in terms of the bull phase. And if you look at how Infosys and TCS have moved, they've gone up on very smart volumes. Infosys is up almost 6.6%, 1592. The volume is 88 lakhs so far, which is 1.4 times the 5-day average. And remember, it's just 953. TCS 4% higher, 3883. The average volume is about 1.5 times the 5-day average at about 2591. And Tech Mahindra, Wipro, HCL Tech, L&T Mindtree, Mastech, Coforge, Persistent, all these stocks are now flagging record highs, new highs on very smart volumes, and occupy at least the top 10 slots out of the top 15 on the NSE 500. With that, ladies and gentlemen, so far it draws to a close. Remain glued to Business Today Television for all your financial news needs, and I'll be back at 2:30 p.m. to take over the last 1 hour of trade on Friday, which is supposed to be ending at a very strong note. Do stay glued. Thank you so much.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Step into the future at the World Economic Forum at Davos 2024. 5 days of continuous coverage with top Indian and global leaders. Join an exclusive lineup of visionaries, CEOs, and policymakers. From dialogues on climate change to economy to artificial intelligence. Experience the transformative conversations at Davos. Business Today Davos, powered by Motwani Jadeja Foundation, conglomerate partner Darwin.
Embraced by azure waters, kissed by the sun,